The Kenya Pipeline Company, or KPC, is launching its initial public offering this year, that is 2025, on the Nairobi Securities Exchange, if all goes well. Meaning you now have an opportunity to become part owner of KPC. In today's video, we are going to explore the reason for privatization, what this means, how to be part of this, what not to do if you want to be involved, and lesson learned from Safaricom 208 IPO. Before we start, a legal disclaimer. The information provided in this video is for education purposes only, and as always, we assess different investment opportunities to just make sure that you are aware of these opportunities. I encourage you to do more research before investing, but this is the starting point. And if you have an interest in understanding investment opportunities here in Kenya, and also the offshore markets, make sure that you hit that subscribe button. Now, what is KPC? The Kenya Pipeline Company is the backbone of East Africa's energy supply, and according to KPC official reports, it operates 1,700 kilometer pipeline network, transporting over 90% of petroleum products for Kenya and Uganda, from Mombasa to Nairobi, Nakuru, Eldoret, and Kisumu. KPC ensures fuel reaches millions. As Business Daily reports, KPC revenue hit 35.4 billion Kenya shillings for the financial year ending June 2024, with a net profit of nearly 6.9 billion shillings. That is a 52.7% jump from the previous year. Why the IPO? Why right now? So the Treasury says that this IPO is part of the Kenya's push to fund its 2025-2026 budget without peeling on more debt, a move that is backed by IMF reforms. And according to the Finance Minister John Bandi, the government aims to raise up to 100 billion Kenya shillings by selling a 65% stake in KPC, while keeping 35% for strategic control. The fund will also support KPC expansion into the LPG, that is the liquefied petroleum gas, and also some storage upgrades as noted in the standard coverage, while they allow everyday Kenyans to own a piece of these national assets. Now, let us look at the numbers and also the structure. How big is this deal? Analysts cited in the Star estimates KPC valuation at 154 billion shillings, priced at 4.35 times its annual revenue. The Privatization Authority said that up to 30% of the shares are reserved for retail investors, which ensures that it's open to investors who are starting the stock market investing journey, or the everyday Kenyan, or the hustler investor. This could rival Safaricom 208 IPO, which raised 52 billion shillings, making it Kenya's largest to date, according to the NSE records. Now, this IPO have had some hiccups, and the Consumer Federation of Kenya, as reported by Citizen Digital, has filed a High Court petition claiming insufficient transparency in this process. However, the Treasury counters this, and they are saying that all legal steps have been followed. So we are still waiting for the High Court ruling on this so that we know how this progresses. But meanwhile, I don't know what you think about this listing. Maybe you can let us know in the comment section. But the regional stock exchange leaders from Rwanda and Uganda, as quoted in Business Daily, see KPC listing as a boost for cross-border investment and market liquidity across East Africa. Maybe you can let us know what you think about this. Now, how do you get involved if you want to be part of this IPO? If you're ready to invest, you need to open a CDS account with a stockbroker, a licensed stockbroker. Then keep an eye on the NSE or news for the prospectus and subscription dates. The official prospectus will detail the exact dates. Typically, 1 to 2 week subscription window shortly before the listing, and then you'll be able to apply for subscription. Now, I would like us to go through the lessons we learned from Safaricom IPO back in 2008 so that we know what not to do and what to do during this IPO. if for those who are interested. So if you want to be part of this and don't have a CDS account, you need to act quickly to make sure that you open a CDS account. As we learned from the Safaricom IPO back in 2008, and I know things have changed a little bit because now the CDS account is online and you can do this by yourself, but you actually need to get the CDS account. And the Safaricom IPO saw an overwhelming demand with over 800,000 applicants, but many missed out due to delays in setting up the CDS account. So make sure that you get this account early. The next thing you need to do is make sure that you apply early during the subscription period. The Safaricom IPO was oversubscribed by 400%, leading to refunds for many applicants. Others never got their money back, and the early applicants secured better allocations. So make sure that you keep an eye on the announcement to know the exact date of the application. The next thing you need to do is to understand the company's fundamentals. And as we learned from Safaricom again, investors who studied Safaricom dominance in telecommunication, that is a 30% market share at the time, and growth potential reaped long-term rewards. The share price initially started at 5 Kenya shillings, that was the IPO. It grew over 600% in a decade for those who held the investment for a long period of time. Although the prices dipped at some point, there are people who bought at 5 Kenya shillings or 8 Kenya shillings and sold at 40 something Kenya shillings per share, right? So make sure that you research on the KPC financials, review the prospectus for valuation deals estimated at 154 Kenya shillings billion to make sure that you assess if the offer is actually fair. The other thing is you need to balance short-term and long-term goals. Many investors for Safaricom sold shares early for quick gains, missing out on massive long-term growth that is in both capital gains and also in dividend sales, while others held too long without diversifying, facing the volatility risk. And they ended up actually losing on their capital considering the inflation over years. If you're aiming for short-term flips, monitor post-listing price surges. We know that Safaricom prices dipped initially, but it did better later on. The other very important thing to keep in mind is you need to be aware of oversubscription and refunds. In 2008, during the Safaricom IPO, there was oversubscription, and this led to partial allocation of shares, with refunds taking weeks or months, tying up capital for some investors, while other investors, they never got the refund. Make sure that you apply only what you can afford to lock in temporarily or for a period of time. And if there is an oversubscription and there are refunds, make sure that you get your refund. And keep in mind that these refunds may take days or months post allocation, okay? The next thing is you need to stay informed on legal and market risk. While Safaricom IPO was actually very smooth, some investors overlooked market risk like post-IPO volatility and also global economic conditions, like what we saw in 2008 financial crisis, which hit shortly after the listing. So make sure that you monitor legal challenges like what you're having with KPC, the Consumer Federation of Kenya petition. But this did not hold the parliamentary vote the other day, that is 23rd of September 2025. So make sure that you keep an eye on this, and so that you know how this progresses. Also make sure that you assess the broader risk, that is the oil price fluctuation, the green energy, and also the NSE volatility. Now, I'm going to end this video here with this word. Fortune favors the bold who sees the opportunity. Assess this opportunity and see whether it's an opportunity you can take advantage of. Now, let me know in the comment section, would you actually invest in KPC shares when they're listed? And what is your take on this listing? If you have an interest in investing in the offshore markets, here is a video to show you how to go about it. Thank you so much for watching. Happy investing. See you in our next video. Bye.